Okay, so I can confirm right now that in 12 months, at the very latest, there will be no incentive to use dark pools in the manner of which they've been used to suppress volume at the levels they've been suppressing volume that we've been seeing in the, you know, basically the last 10, 15 years. So this is nuts. This is section 4, prohibiting voting by non-operational equity trading venues. This is huge. So the CT plan has been in development for, just like the CAT plan, quite some time. So after seeing this one come out and thinking about everything, the filings that we've seen come out this year have taken no effect on anything because of one reason. Where's all the volume going in the market? Where is the majority of the volume being executed in the market? It's not on exchange. We know that. So if it's not on exchange, then it likely explains why we've been seeing the price action we've been seeing, especially in GameStop's case. So how do we know that there's not going to be any more dark pools? Well, luckily, I'm artist enough to have been following all these filings and I'm able to put it all together. What have we seen come out this year? If you remember, if you've been with me since the beginning, hopefully there's still some of you out there. What have we been covering? What have you seen on my channel a lot? Market share filings out of what? SROs. All of them basically have filed for market share, and they specifically state in their own language that there is no exchange right now that has more than 16% of market share, except for one entity, and that's the NASDAQ itself. Now, here's the kicker. If you want to be able to vote on the operating committee, you're going to have to participate in the lit markets. So the SEC is basically saying, if you want to participate in the decision-making process of how these markets will operate, you must contribute to these markets in the form of market share. And the target, if you want to vote, SRO voting reps will have one vote to cast on behalf of the SRO group or non-affiliated SRO that he or she represents, with the second vote provided if the SRO group or non-affiliated SRO has a market center or centers that trade more than 15% of consolidated equity market share for 4 of the 6 consecutive months preceding a vote of the operating committee. So not only do you have to have it 15% or more, they can't just do this one month and have a little scam going where they just have a 15% month and then the next 6 months they're scot-free and can do whatever they want. They have to have 4 out of 6 consecutive months preceding a vote hit this threshold. That is huge. It's basically putting the market in a state of competition that will basically put a volume cap on dark pools, because they're not going to be able to execute as much volume as they please, considering now there's a market share target. Now, of course, this was several commenters object to the proposed allocation of voting rights. You can see why. Now, if you go back and you read the filings, in the filings when they claim about market share, the reason the SROs give for not having market share is they say due to a highly competitive market. Now, that is bullshit, and people reading these filings wouldn't know that, unless they go through all these and put everything together and study and figure out what's going on. Now that we know that there literally is no competition in the market because we've seen the data, which I'm about to show you again to reiterate, it's apparent that the market's fragmented because it's all being done off exchanges. So if it's all being done off exchanges and we have all these SRO rule filings come out, obviously they're not going to take any effect. Now, but why would they do the filings if they're not going to take effect? That's the question. Because they've been working on these bigger ones forever. That's why. It's all around the bigger picture, the CT plan and the CAT plan. Oh, and by the way, Article 4, Section 4.3 AI of this plan states that FINRA is not considered a market center. Now, hold on a minute. Take a look at this. Take a look at this video within a video. Is this a video within a video? You're goddamn right it is. Okay, so where we're at now, we're on an SRO website. This is SIBO. Okay? SIBO Exchange. What we're doing, this is a market share chart. This is data using the UTDF and CTS consolidated data feeds. Data displayed represents volume of shares matched. Wow, I am fucking retarded. I'm sorry. Is this a data displayed represents volume of shares matched? Data is believed reliable but not guaranteed, of course. That's just a general disclaimer. Now what we're going to do is we're going to select every SRO. These are all SROs, or self-regulatory organizations. We're going to select all of them. We're going to see the current state of market share right now as opposed to a potential 15% overall target that must be met. And by the way, that's for each individual SRO. So here we go. What do you notice right off the bat? That's a giant gap, huh? Well, the gap is, basically we had a spike from the NASDAQ on June 25th. But other than these anomalatic spikes, wow, anomalatic is fucking Jesus Christ. Okay, basically, if you look at this data, what this is telling you, these percents right here is the percent market share out of each individual exchange for August 6th. What do you notice? None of them are even close to 15 except one, NASDAQ. So, and the only thing that's over the target that's not an off-exchange venue is the NASDAQ. So literally every other exchange on here isn't even close to the target. The only other closest one would be the NYSE floor, followed by the NYSE ARCA. But if you look historically, this is not a new problem. This chart goes back all the way to 2015, and as you can tell, the gap between these two entities here, which is the ADF and the TRF, both from FINRA, which again are not included in the calculations for the market share because they have off-exchange venues right here that, as you can tell, have been controlling the entire market share for quite some time, as far back as this graph lets you go, which is basically August of 2015. So we're talking 6 years ago. And it's done nothing but go up. So the competition, no. The way they've been filing these is to beat around the bush. They know. They all know. So that's market share. So there you have it. That was recorded in volume of shares matched. So what, again, do you notice? These two entities are owned by who? FINRA. What did we just read about FINRA? FINRA is not considered a market center under this section. So hold on a minute. So you're telling me that 41% of volume plus 8% of volume, and by the way, this is ongoing daily averages. Like it's typically around 40% ADF, 8% TRF NYSE, and the TRF Carteret 31.91%. It's usually in the 30s. That's a shit ton of volume on a daily basis. So if you no longer can have that here, all that volume's got to go back in here. So if all that volume's going back in here to try and meet these goals that now have to be met, which a lot of these are nowhere near. So the NYSE is okay because it said groups of market centers. So the NYSE, NYSE ARCA, NYSE floor, I believe, will be considered together, combined. So they shouldn't have an issue. The NASDAQ shouldn't have an issue. But the NYSE Chicago, I'm sorry, the NYX Pearl, the NASDAQ BX, or SIBO will maybe make the cut, but the long-term stock exchange, 0%, 0%. Investors Exchange, IEX, not even 3%. Members Exchange, I mean, it's just nuts. So this is crazy. And the reason why we know it's within a year is because this will be fully in effect within a year. It's clearly in the filing. It says that. And we're going to get quarterly updates as to the progress reports, and they're going to be publicly disclosed progress reports on this plan. It specifically says in this filing that, everyone, including the non-SROs that were allowed to participate in the commenting, basically ripped these people a new asshole for can kicking and indefinitely suspending a lot of these rules filings that we've been waiting on for ages. So, I mean, the clock's ticking. Tick-tock, man. It's like we've all said. Now, would this have happened without everyone, digging in? Who knows? But, it's just nice to see it all come, like what you've been reading for so long, take effect as far as language. Now, again, I will remain skeptical until I see action, but the language I've seen out of this CT plan, the fact that the SEC put their hands in it, stirred it up, asked the public how they felt about it, heard from both sides, and ultimately sided with the public, I'll take it. So, again, dark pools, there's going to be really no incentive to use them because you will not get that vote. The SEC is basically, in a nutshell, the point of this video is saying, if you want to be able to make influence on the operational decision-making of this plan, you must contribute in the form of market share to this market. So if you want to control the market, then you're going to have to participate in the market. If you're not, you don't meet it, you don't get a vote. So that's it, everyone. Hopefully this made sense. And I thought about something earlier. I keep trying to explain this to people like they're 5, like I keep getting requested, and then it hit me. 5-year-olds don't understand this stuff. So anyways, I'm going to go get more baked now. Productive, that's what that means. Goodbye.